Hey MegaWhale team, we're here for another video today. We're going to be taking a look at Rune. We're doing a technical analysis. We're going to be focusing on two things. We're going to try find the local bottom, and we're going to try predict where the trend's going to be heading in the short term and long term. So obviously we're in a bit of a downtrend right now. We can see that the price has been heading down for now, I'll say a few weeks. We'll take a look. The price has been heading down for about 40 days, so a bit over a month, about 6 weeks. And you know, that's a pretty considerable amount of time for the price to be heading down, so we're expecting a local bottom pretty soon, but we'll take a look. So we're going to put in our long-term resistance line first. So this is our long-term resistance line, which we found our May high and our November high in. And we've got our support line, which has been traveling along, we'll say around about $4, yeah, about $4.36. So we have that support resistance flip here that sent us up. We have a nice strong resistance and support zone here, obviously another strong support zone, and then we have that fake out and continuation over here, over correction. So what do we expect to happen? Going off the chart pattern alone, we're in a descending triangle pattern, quite a large descending triangle patterns. Descending triangle patterns are usually bearish continuation patterns, but it doesn't mean we're going to break below to start with, guys. What I think is going to happen, we're going to see it. We saw a nice swing high, a low, a high. We're going to come down and make a double bottom. We'll either make a double bottom around over here, or we're gonna make a slightly higher high than what we made here. So either we'll see the double bottom here, or we'll see it a little bit higher around the $5 range. And then we'll have one final continuation upwards. Now I think this continuation upwards will either, get rejected here and send us back down, or we'll break above here and continue upwards. Both of these are very real possibilities, but we'll have to analyze the charts a little bit closer to the date of when it happens. So let's take a look at our possible bearish scenario first. So we'll get rid of this. So obviously the bearish scenario is that we basically continue in this downwards pattern we've had here. We have lost that 200-day moving average on the daily chart, which is bearish, and we are closing this candle quite low. You know, we're underneath this pretty strong support zone we had over here, which is about $6.40. Again, we can see a lot of support and resistance around this zone, this whole area here, and this whole area here. We are now under that on the daily. So it'll be very important to see where this daily candle closes. If we don't get back above this, I'd say $6.40 range on this daily candle, there's a very, very strong chance, guys, we're going to bleed downwards and create a new low around either between $5 for that higher high or around $4.30. So we'll have to keep our eye on that one and see how it goes. So the bullish scenario is that we do bounce here and we manage to get upwards. And I would say we would need to get over, we want to see a price come over $8. So if we can get the price over the $8 mark, we will probably clear that 200-day moving average at the same time as this converges downwards. The price will cross over. And that will be a good indicator that the market's going to rebound and reverse. So those are the 2 points we're looking at. Let's take a look at the Fibonacci retracement. So where do we think the price is going to head on that short term? Let's have a look. So I'd say long-term bullish scenario, we're probably going to head up, and we can definitely reach that 1.6 fib around $33, $34. So that's our long-term projection here. Obviously, none of this is going to happen if we fail to hold this level here, which is $4.30. This is the most important level of the chart right now for support. I would say between, let's just make these a different color so you can see. Between these two blue lines right here, our sentiment is more bearish than bullish. All right, we're a little bit more bearish than bullish. We're not in a bear market as of yet because we do have this final support. If we fail to hold the support and we drop below it, then I would say we're officially in a bear market. The prices could go as low as about $1.30 if that comes around, but we're not going to go that today. And I'm not going to be bullish unless we break the $8 mark. So at the moment, we're just going to be zigzagging the zone here, waiting for a reversal before we get back in the market. Either we're going to enter close down here, when we get a nice bullish divergence or an indicator that the market's going to reverse, or we will enter upon a break of this blue zone here, which is going to be a safe entry. All right, let's take a look at some technicals, guys. That's enough about the market. All right, so the first technical indicators we're going to be taking a look at is MACD down here in conjunction with our 200-day moving average and our Ichimoku cloud in conjunction with our MACD. So first and foremost, those of you who don't know how to use the MACD and 200-day moving average in conjunction with each other, it's a really, really simple trading method that we can use. Basically what we're looking for is we're looking for one of two things. We're looking for the price to be above the 200-day moving average. We'll take this area for instance, and we're looking for a positive cross in the MACD above the 0 point line. So the 0 line being here. All right. So we've had that positive cross, and we've had the price above the 200-day moving average. That will be our entry point and our entry signal. The price continues upwards. Simple as that, right? It doesn't, obviously the success rate doesn't work all the time, but that's a good indicator that the market has a potential rebound. All right. So we're going to take a look. We're looking for something like that. At the moment, we see the MACD is still printing some heavier sell pressure. Rejected by the 200-day moving average, never a good sign. Similar to here, rejected by the 200-day moving average, indicating the price is going to come a little bit lower. All right, let's zoom out a little bit and see what we think. So here we go. We're still above the 200-day moving average on the 3-day chart. And we saw a similar pattern over here where we came down and touched that 200-day moving average and bounced back up. We're still printing all red. We haven't had a more positive, favorable day for the bulls in the 3-day chart yet. So we're still expecting some more downside. We are still below that critical support zone. So I would say the next step would for us to come down to our 200-day moving average and see if we can hold that as support around the $5 range. That reinforces our statement before, which is we expect $5 to $4.36 to be our local bottom. So we'll expect to move downwards, either a crash below and bottom out here, or a pump back up and bottom out here. All right, we'll have to wait and see for what happens there. So let's take a look at the Ichimoku cloud. Now the Ichimoku cloud is a great one. I'm a huge fan of the Ichimoku cloud for predicting, I would say, price movements, not so much trends. It's a really good way of predicting price movements. So for those of you who don't know, the blue line here is the conversion line, and that red line here is the baseline. We're going to be talking about those two today, as well as the different clouds. So our sell signal printed here. Our sell signal for Ichimoku cloud is when the price drops from above the clouds and below the conversion line. So we dropped from above the clouds and below the conversion line. That was our sell signal. All right, if you traded off that based alone and you sold there, well, the price went down 52% from there, and you would be pretty happy that you sold. All right, so we're looking for, basically what we're looking for here is we're looking for a reversal using the same principle. We're looking for a break above the conversion line, as well as the baseline. So the baseline is important. We need the blue line to cross above the baseline, the red line, as well as the price simultaneously crossing above the blue line. So we saw it over here. Perfect example. The price broke above the blue line, pushed up, and then our conversion line crossed our baseline right here. And that was our entry. All right, perfect entry. We pushed through the clouds. We continued upwards. All right. I think from there, if we got in, we've done nearly bit over 100% gain. All right, great, really good trade. And again, over here, we can say a similar thing here. Conversion line crossed the baseline, price went over the conversion line, and we shot up again. All right, so the Ichimoku cloud is a great way of predicting different trends. Great way of predicting market movements, and you can use it to predict drops, potential drops, and potential pumps. So according to Ichimoku cloud, we still have a ways to go. We still need to get this conversion line down, and we still need to bust or break above that conversion line and that baseline crossing. So that could take some amount of time. I would say again, it reinforces the fact that we need to cross that $8 range to be bullish again, or we need to come down and create that higher low down between $4.36 and $5 before we look at any bullish scenarios again. All right, let's take a look at one more. We're going to take a look at the bull market support band. Now, the bull market support band, unlike the Ichimoku cloud, being a great way to predict movements. The bull market support band is a great way to predict trends. We can see whenever we're trending below the bull market support band, we're finding resistance and we're heading downwards. And whenever we're trending above the bull market support band, we're generally finding it as support and trending upwards. So we can use the same principle here. We broke below that bull market support band on the 9th of November, and we've continued downwards ever since. All right, so what we're looking for is we're looking for a break above that bull market support band, similar to these points here, and hopefully a trend reversal. Again, we do have some distance between the price and the bull market support band. It is a lagging indicator, so it will only give you the bottom signal a little bit after the fact. For example, here, we had the bottom signal around the 21st of July, and we only had the buy signal for a bull market support band on the 29th. All right, so it's a bit of an 8-day lag. So it does lag a little bit, but it's always going to be a pretty safe bet. If you rather safety than risk going off the bull market support band when it crosses a better entry than risking it when we are a little bit more unsure. All right, guys, so that's it for today's video. We still think long term, $33 is definitely a target if we're able to hold this blue line. If we fail to hold this blue line, our target is going to be around $1.23. All right, until we cross this blue line here, the $8 range, we're not going to be a bit bullish, and until we cross below the $4.36, we're not going to be bearish. Until then, we are simply just consolidating, and we're waiting for that bottom signal to be in before a strong push up or a strong push down. All right, guys, if you have any questions, leave them below. Remember to like the video and subscribe to our channel. Click the links in the description, join our Twitter, join our Telegram, and remember, you can vote for your next altcoin to be analyzed on the Twitter. So head over to Twitter, go to the comment section, and comment which altcoin you would like to see next. That's it for today, guys. I'll catch you in the next video.